Hey, it's Mack with PriceActionTradingSystem.com. It's Wednesday. It is February 10th. This will be our chart lesson for the day. And it was just another trading range day. We had some really strong resistance here about 1870, and the support came in down here mostly around the 1845 level. We did push lower than that in the overnight yesterday, and it looks like we pushed lower than that in the overnight again today as well. But it's really two tiers here. This is more the midpoint, but this was really your upper support, or I'm sorry, upper resistance for the most part, and your lower support, which basically was the lower support near the close yesterday afternoon. You can see it's acting as support and resistance, swinging both sides there. And pretty much the same thing up here. We broke above early this morning but got back inside pretty quickly, so failed, traded back inside really quickly there. But let's back out and talk about the trades. Lots of trades again today. Not as much movement as there was yesterday, but still some pretty good movement today, so you had a chance to make some money. First trade I saw was this setup right here. This one's real close to being green. I went ahead and made it red. I'll explain it to you. Notice we're moving up. We do get a close outside here. A couple of them move to a new high. And notice there's a little double top basically there. And we came back and we tested that same area and it failed again. And this was a fairly bearish bar. It closed back up into the bar with a little bit of a stem there. But what I would have done here was I don't think I wouldn't go short below that doji. That's more of a neutral bar, although it is telling you something that there's a reason that forms there, because that resistance is running right across that last close there, and we couldn't close above it again. But I would have waited on this bar, and I would have let prices break below and then dropped a limit order back up in here, probably right where you would have entered on a stop on that bar, and you would have got filled on that, and then it drops on down. And you might have had a better setup there on your chart. You know, tick charts and volume charts are not static. No two look exactly alike. So when I get that question, if I had $1 for every time I've answered that question, I'd never have to trade a day again in my life. I'd be a gazillionaire, literally, because I get that question 3 times a day almost. My chart doesn't look like yours, so I'm going to probably just start mentioning it quite often, that volume charts and tick charts are not static like time-based charts. No two will look exactly alike. It doesn't matter. As long as you've got the same general number of bars and the patterns look the same, that's all you can ask for. That's as good as it gets. So some trades will look a little better on your chart, some will look better on mine, and your chart some days might look real close to mine. If you load historical data, if you're getting your historical data from the same place as me, they might look exactly alike, but once they start forming new from that point on, after the historical data loads, they're going to look different. And that's just the way it goes. And I've had people say, well, part of it looks the same, and then suddenly it looks different. I've had people argue with me that, that they can't, they're mad because their chart doesn't look like mine, and they want theirs to look like mine. And I understand why you want yours to look like mine, but it never will. So, again, I probably need to start saying that more often to save myself from having to answer that email 3 or 4 times a week. So, but I understand why people ask it, and I understand why you're concerned, but it's not a concern. It doesn't matter. Your chart will not look like mine. So just remember that. But anyway, nice setup right there, and you might add a better setup. But then we're moving lower. Notice how we pushed right through that EMA. Notice we had the break, the new high. We found strong resistance. We pushed right through the EMA. That's your reversal setting up. There's a breakout pullback short right there that would have worked, but I don't think you want to go short right there. Not with those 2 up-down bars. This is very bearish. Both of those are very bearish. And it does pull back. And I would call this a shorter term trend line right down through there. So you might have wanted to go short there, and actually looking at it, thinking about it a little more after the fact, it probably deserves to be at least green, because there's reasons to like that trade. That is very bearish bar, and it would have worked, but um, I didn't like it at the time. But there are some reasons to take it, and if you took it, it worked. And it is a second entry counting. It's actually a failed second entry long, because you got a new high, pull back first entry, pull back second entry. So you could even treat it. So they're, thinking about it like that. Yeah. And it does have it is a reversal pattern. It does shoot right through the EMA. So looking at it and thinking about it even more, I just missed that one earlier for whatever reason. But anyway, you get another chance to enter here, basically the same trade, same spot, and this one's a lot safer and a lot better setup. Notice the new low, pull back first entry, pull back second entry. Look how bearish that bar is. Notice that it makes a double top across here as well. It's a breakout pullback for this area right in here. So that's your better setup, and takes off pretty quick. And then we just kind of start going sideways. It's tempting to enter long right here, and there is a failed second entry short with strong support, but we don't have a break of this trend line yet. So you got to be real careful going long that close to that trend line. There's probably enough room to get out before the EMA, but you don't know you're going to get a break here. And this is pretty much going sideways, so it's too risky. Just sit tight, and you get another short right here. Notice you get a break outside. Now you got two legs up, one leg correction, and there's a little two-legged correction there. The second leg up. Those are two perfect measured legs up. You can see the first leg right there. And your second one, that's a perfect measured move, basically. It looks like maybe there's one tick difference. Then you get a relatively bearish bar. Just go short there. And actually, because of the little, if this one would have broke higher, it's a higher low, so you really could go short there. If it would have broke higher, I would have marked that one red as an add-on. The fact that it didn't break higher and we had the bar stacked up, I was a little leery of adding on again. If you weren't in yet, I would be willing to give that one a green one, but I wouldn't add on there. It's a little bit risky. It's a little bit aggressive. And now notice what happens. You got your okay. I had a slight interruption there. I think we finished up on this trade, but anyway, I'm willing to give that a green one. And we got the break of the channel coming down. It moved down, and so at this point, your trading range is up here. It turns out this is just a midline, but at that point, you're playing this trading range right here. We didn't quite get a new low there, and this is a nice reversal type bar, but it's so close to the EMA, and we didn't quite get a new low there, so I was a little scared of it. And it did end up going lower like I was suspecting, but it still would have, if you'd have taken the long, you'd have had a nice long. But I just think it's too risky. And there's a second entry short here, but this signal bar is horrible. And by the time you get this one, you're right back into support. You don't want to go, you can't go short there. And you see it did bounce. It ended up going lower, but most of the time it'll bounce and stop you out if you do that. So you can't go short there either. And then finally you get your new low here and we reverse. Once again, it's tempting to go long here. We do have the break, but this is just a neutral bar, and then you get another neutral bar, and so it's a little risky entering out of that congestion right there, especially with the support being right there, because it might have turned into resistance. We may be going lower. It ends up bouncing, and you just know, I mean, that's a great trade, but there's just no way to really get into it. Once again, I think you got to skip it, and it's just not worth the risk. And that's what gets people. They'll see this trade, and they know they're smart, following the rules. They'll know, hey, I probably shouldn't go long here, and then they'll watch it take off, and they'll say, yeah, I knew I should have taken that trade. But that's what the market will do. It'll lull you to sleep, and so the next time you take that, you'll enter, and it'll instantly fail, and you'll get stopped out, and you think, yeah, well, but that's what the market does to you. So when you see that happen, you got to realize, hey, that's a nice move, and it's going without me, but I followed the rules, and the rules say that's not a good trade, so you didn't miss anything. And that's where you got to get mentally with this. And I've had a lot of conversations about the mental aspects of this trade, of day trading and trading in general. And you got to get to that point where this is a job. This is just, it's a something you do every day. You don't get emotionally tied to it. When you miss trades, you don't get mad. When you have losing trades, it doesn't bother you. When you have winning trades, you don't get all excited and on a high. You got to keep an even keel. You don't get too high. You don't get too low. And you don't let things worry you. If you miss a trade, there's another one coming along a few minutes later. You got to be patient. You just have to be patient and watch this. And then guess what? You get a two-legged pullback to the EMA. So it's a second entry long. Um, Normally, I would say you wouldn't. This would be green, and you have to be careful because that's a doji. But notice that support right across there. That's like a double, triple bottom there. That's a failed break lower too. So there's a couple of different reasons to like that trade. And you could have let it break higher and dropped a limit order where it would have gone, and I think you would have still got filled. I know you would have come back here and filled you, and then went higher. But yeah, you know, I'm willing to make it blue because it's a failed break lower. It's a um, it's a second entry long. It's really a failed second entry short as well because this is a new low. You're pulling back. You get a first entry. You're pulling back. You get a second entry. It does break a little higher there and then down, but you could still treat that like a failed second entry short for the most part. So there's several different reasons to like that one. And then, of course, you get your failed second entry short counting off this low right here. So I like that one. Uh, this one was right into that resistance. And this one was too, but with a trap and the fact that we're not back to the upper side, I think that one's going to be okay. And it did break lower and turn and go out the upper half all in the same bar. So another reason I liked it. But that's a nice setup right there. And where does it go? It goes straight to that high. And you would have had a runner there, and I would have just exited right there, right underneath that resistance. And so you could have gotten several points on a runner right there. That's 3.5 points right there on a single runner. And then, of course, you get another bounce off the trend line right here. But I tell you, I just think it's too risky to go long into that resistance. Everything's failed. Again, you got a little bit of a double bottom with a trap, but you just don't have much room there. I think that's another one that you got to watch and just let it go without you. It turns out to be a really nice trade. It's frustrating sometimes when you get those, but I'm telling you, the right move is to follow the rules and let it play out and just not let it bother you. And so we get up here, we get an overshoot. Okay, another interruption, but this one is really tempting to go short on, and actually you could. I'm willing to give that one a green. Um, it's aggressive, so you got to be careful. But we're so far away from the EMA, we overshot this two-tiered channel. This was like a spike in a channel here, and we overshot that upper side right there. You can see prices crawling up that line, and then we overshoot it. Um, it's a bearish bar. It's not the most bearish bar, but this one was really bearish here. But you're so far away from the EMA, and on a range day, you're not going to get too far away. You're going to snap back. So I kind of like that one just because of how far away from it is. You get a second entry short right there. That's more of a neutral bar. It's right into the EMA. You might still get one more attempt at that new high, but it just shoots down in the second entry, another second leg, and then it bounces. And so you can treat, and notice you got your trend line off those first few bars there, and it pulls right back to that trend line. It confirms it. You could treat it like a failed second entry long, um, and it doesn't break higher, but it closes right here, opens, tries to trade higher, and it turns, goes right down and breaks straight out that other side. When that did, you could have a stop there, but this is one of those where I'd like as soon as it breaks lower, I'd drop a limit order a few ticks back in to see if I could get filled. And you could have gotten filled all the way back up to at least right there. I can't remember if it even went a little higher than that. And then, or you could have even waited on this one and done the same thing, let it break below, drop a limit order in. But either way, that turns out to be a great trade. And any runners would have been safe. You could have ridden them all the way down, all the way to this other side and been ready to exit right about there. So I like that one. And then we actually move on down. We actually get a close outside here, and one push down, and you come up and you get another push down. And this really is kind of a trading range. And you figure we're going to test this low right here. This is like the double test of this high right here. You can see that coming across there. It's a double test of the EMA. It's a fairly bearish bar. It's not completely bearish closing on its end. But you got enough room to get out before you get back down to these lows. And we're probably going to make a new low. So it's probably headed to here. So I like this one. It's enough reasons to enter it. I really would have liked to enter here on the second entry, but this bar is too bullish and this one's too big. You're right into that little resistance area, and you see it would have bounced. You still would have survived it because it didn't go above the signal bar, but I just don't think that was worth risking. I think you were better off to wait on that double test right there, and then it goes lower. And then once again, now you've got your close outside, your move to a new low. Okay, I'm sorry. I keep getting interrupted. I can't get anything done this evening. But anyway, it bounces right off that original support area again. We're way away from the EMA. I like that one just for a straight long, hoping you'll catch it to the other side. Turns out to be a nice trade. Easy scalp, but it comes back. Because it didn't take off here, this one's got 3 bars stacked up. There's a lot of stems on both sides. It's not a real good reversal type bar. So I didn't like going long there again. I think you're better off to wait. But notice all that resistance across there, and look what happens. You got a little trend line working up. You get a close outside, move to a new high, a failed break higher, a big bearish reversal type bar. I like going short on that one, figuring it's going to push down and make another measured leg down, probably similar to that one. But this thing just keeps going. And then you got another one here. This one is this one is real close to, it probably could be green, but look what happens. You got the failed break, and then you get a failed second entry long. It broke higher and turned and went out the other side. You know, that's a trap. I guarantee you there was people loaded up trying to catch the bottom of this thing, knowing that we didn't go higher here to the other side. There's going to be trap traders, and I think that one's worth risking right there. And I like it so much, I'm going to leave it red, but it is very close to being green simply because it's into that support right there. But if you look at it, your entry should have been 1 tick below this bar, went higher and turned. And so there's probably enough room to get out before you get to those lows. It's real close, but I just, because and that's the thing. People will ask me, they'll see failed second entry longs and they'll say, why didn't you take that failed second entry long? Well, the idea behind a failed second entry long is it's a trap. And that's what makes it work. It fools people. And so if a trap doesn't, if you see a setup and you don't think, it didn't make you at first tempted to go in the other direction, then it's probably not a trap. There's not going to be too many people fooled. And so, you know, this is a good example of one here. This is a short trap, and that's why it rocketed off like that. Most people aren't going to be looking to go long in there. People are going to be thinking, hey, there's resistance across here. I'm going to get short, and they're trying to pick tops, and they trap those people, and then it runs higher. So think about it like that, and that will help you to understand when a trade's going to be a trap. And that's what basically happened right here, is that people were trying to get long at the bottom of this trading range, and they get trapped here, and it turns, and when it goes out the other side, that's why it finally pushes on through. But even once it pushes on through, notice it doesn't get very far before it snaps back, and that's generally what happens on range type days. all your breakouts are going to fail. And I bet if you measure this, they're going to be real close to, that's your breakout failure on the other side right there. And there it is on this side. We didn't quite go that low on this side. We were within a few ticks of it, maybe a point. But usually they'll be very close and similar in size. They'll be like a measured move. So anyway, that's going to be a failed break lower. That's two measured legs down. There's a leg there and then another leg. And so I like going long right there. It's a little bit aggressive because we could have kept going. But there's enough reasons to like that, being that far away from the EMA, again, just like up here, that it's worth being green. And of course, that if you caught that, you know, you can ride that. You catch a runner, and you can ride it all the way back to the top. There's a shorter term trend line right here, so you probably, depending on how you play it, you might have exited a little bit earlier. But you can see that shorter term trend line, and then you get the failed second entry short right there, and it goes higher again. And notice the support hold. But that was the first break of that little trend line, and look how we shot right through the EMA. We pulled back, and so I like that, and it bounces off that support right across there. So I like that for a long, and then you get the failed second entry short right there and a bullish reversal bar. So I like, you know, you actually would have been scalped out of this one and got stopped out because it did pull back, but you can add on here, and then your runner's safe again. So if you got in here or here, the runner's safe. And that's why I like these trades a lot. They're a little more aggressive, but by taking on a little more risk, the payoff's usually a whole lot better. So that was a nice trade. But all three of these were pretty good trades. And again, if you caught this one or this one, you got a runner going. And then guess what? You get a two-legged pullback to the EMA, the trend line, a nice bullish type reversal bar again. You go long right there, figuring that we're at least coming to here, and we could go higher. And of course, the previous resistance there, it holds. But notice you do get a close outside of this down here, but I'd be very leery of counting that as a close, just simply because this is more of a trading range that's a little bit flat. So I would treat this like on the way up, there's been no break yet. So this is the first break. But notice how we don't get any setup. We just push on through, then we come back. But you don't get a good short setup there. And then you come back here and you make a little double top. But you do get a nice setup bar there. So I like going short. And this is starting to look like a trading range. You got a double bottom, a double top. So try to ride that one here, and then it bounces. You don't get a good long setup because you can't get long till right back into there, so you got to skip that one. But then you get a double test of that. You get another, that really confirms that trend line. You do get a close outside. Look how bearish that is. And you got plenty of room to get out before here, so I like that one. And this one just takes off. You could have caught a runner there. You make a new low, and then pull back first entry, pull back second entry. So there's a second entry short right there. And once again, it comes up. It's back inside this little trading range, and it comes up short. And so at this point, this was after 2 o'clock, but it's such a good setup. I liked it. And once it started going lower, first of all, look for a measured move like that. And then I would also look for a measured move like that in case it kept going lower. You can see we actually went a little bit lower than that and then just kind of went sideways. So pretty good trading day. Again, just another range day. And you just have to, you know, anytime the prices are swinging back and forth across, you know, this is pretty much trending here. And this is pretty much trending here, but as soon as we get to the other side, we kind of start going sideways and it starts swinging back and forth above and below the EMA again. So we got some trends within here. This is pretty much trending all the way down here. So just remember that. Use that EMA, help you with that. This is definitely a trend working up here. Look how we're consistently above the EMA, and then we start going back and forth. We're starting to go sideways. And then we're trending up, we're above, and we're trending down, and we start going sideways again. We're trending up, and we start going sideways again. So that's pretty much it for the day. Apologize for all the interruptions. It's been one of those days for me, but another good trading day. We'll be back again to do it tomorrow and wrap up our week on Thursday. But I'm done for today. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.